Hi there. I'm Doug Riley with Centennial Tax and Accounting, and this is my 2 cents on past serenity taxes, or as we say it around the office, PTET. Past serenity taxes are just the latest in a long line of tax regimes put into place by states trying to help the owners of small businesses properly file and pay state taxes on their business income. But unlike the older regimes, opting into PTET offers taxpayers the potential for significant tax savings with very little potential downside. So, what are past serenity taxes? Well, in most states, PTET was rolled out in response to the 2017 Tax Cuts and Jobs Act, which simultaneously imposed a $10,000 cap on state and local tax deductions and greatly increased the threshold for itemizing deductions at all. These two changes, when taken together, made it very difficult for small business owners to deduct the state taxes owed on their business income. So, state governments stepped in and responded by allowing businesses themselves to elect to assume responsibility for and pay the taxes, which would mean that the business themselves, in turn, are able to deduct the taxes on their business returns. Now, just to ensure no double taxation, the owners of the businesses would be provided a tax credit for their personal returns to offset the taxes already paid by the businesses. Past serenity taxes are sometimes mistaken for similar tax systems that came before them. But PTET is not an old-fashioned corporate income tax like those paid by the C corporations of yore. Unlike those taxes, the owners of the businesses opting into the PTET get a significant tax benefit in return. For example, the owners of Illinois businesses can claim a dollar-for-dollar tax credit on their personal state return for the state taxes paid by the businesses on their behalf. There is no double taxation happening here. PTET is also not one of the simple withholding or composite payment schemes like those cooked up by states in the last couple decades to capture lost revenue from non-filing small business owners. Unlike those schemes, the businesses opting to pay past serenity taxes get a significant tax benefit in return. For example, Iowa businesses can claim a full deduction for the PTET payments on both their federal and state business returns. This is not just more paperwork for the sake of paperwork. So, who should be opting into past serenity taxes? Well, that's an easy thing to answer because almost all businesses structured as S corporations or partnerships for tax purposes are very likely to benefit. So, if your business files a Form 1065 or Form 1120S, you should reach out to your CPA today to ask if past serenity taxes are right for you. Remember that not all CPAs are well versed in business taxation. We've seen a couple examples locally of tax preparers having no idea this exists or not understanding the benefits. Do not assume your CPA is already on top of this for you. And if they say you won't benefit, consider getting a second opinion. With all that said, I'm Doug Riley, and that's my 2 cents on past serenity taxes.